Hi, everyone, and welcome to Behind the Numbers. My name is Dave Bookbinder, and this is the program where we dig deeper to understand what really matters most in business. And this is an episode I've been looking forward to for a very, very long time. We're going to be going behind the numbers with some of my friends at Irrational Capital. And if you've done any homework on who I am, or if you listen to some of my conversations, you know that I have written and speak about the value that people contribute to a business enterprise. These guys are on the cutting edge of that concept, and I'm thrilled to share them with you today. Please welcome David Van Adelsberg and Bart Houlahan from Irrational Capital. Hey guys, welcome to Behind the Numbers.
Hey, Dave.
Really excited to be here, Dave. Thank you. This has been a long time coming.
It's my pleasure, and I'm sincere when I say I've been really looking forward to this conversation. So why don't you guys just introduce yourselves? David, I'll start with you since you're just on my left and it makes sense. So just introduce yourself briefly, Bart, then you, and then we'll dive into a conversation.
Sure. So I'm David Van Adelsberg. I'm one of the co-founders. I co-founded the company in 2017 with Dan Ariely. Background in tech, a stint in HR consulting and training, and then a long career in the financial services world. And this concept of irrational capital and the company sort of brings those three concentric circles together.
And Dave, my name is Bart Houlahan. I am a senior partner at Irrational Capital. I'm relatively new to the company. I joined about 18 months ago. My background before then was as an entrepreneur. I ran an athletic footwear and apparel company called And One. I was the president there for about 11 years. And thereafter, I was one of the co-founders and co-CEOs of a nonprofit called B Lab. It's the nonprofit behind the B Corporation movement. I'm excited to be with you today. Thanks for having us.
It's awesome. I want you guys to share with the world who Irrational Capital is and what you're doing.
Sure. So maybe I'll take the beginning of this, and Bart can provide some color commentary, as he always does so well. So Irrational Capital, we believe, is the first organization. We're an investment research and development firm. We take data, both proprietary and public data, fuse it together, and basically connect the nature of the relationship between employers and employees with the ultimate measure of performance, that being a company's equity value, future equity value, as measured by its stock price. And this has evolved into a new investment factor called the human capital factor. As you probably know, investment factors don't come along very often. This one's been independently validated by a variety of organizations. I'm happy to share more about that.
Yeah, we will unpack that as we progress here. Absolutely.
And we have a variety of indices that use the human capital factor, and there are now 3 ETFs in the market through our partner Harbor, using our indices. And then there's a variety of other ways in which the human capital factor can be used. And Bart, we were just so fortunate to have him join, as he mentioned, 18 months ago. And he's actually building a human capital factor ratings agency where companies for the first time can get a measure, a numerical measure, which connects the nature of the relationship between employers and employees and their future equity value. So
awesome.
So 2 things. One is we have an investment research business where we're enabling people to gain access. Look, as we all know, and probably every listener knows, managers the world over say people are our most important asset, and we've figured out how to make that investable.
Fantastic. Bart, anything you want to add to that?
Yeah, the reason why I got excited about joining the company, Dave, was they were already showing extraordinary performance through our partners' ETFs, Harbor's ETFs, where there was significant alpha being generated year in, year out. And what David and I explored was, listen, can we bring this idea to individual companies so that they would understand where their corporate culture is misaligned with creating future equity value? And so that's my principal focus, Dave, is really trying to drive the opportunity for individual businesses to understand how culture ultimately is directly connected to outperformance in the equity markets and illuminate in their own businesses the areas where there might be a problem.
Yeah, and that's where my mission completely aligns with yours. I'm trying to change the conversation in the valuation and accounting profession because, David, to your point, every CEO on the planet pounds the table and says our people are our most valuable asset, but they don't appear on a balance sheet next to the other assets. And we could have a whole conversation about that, but I'm not going down that rabbit hole today. But yeah, there's
We can do
definite.
that another time, Dave.
Oh, that sounds like so much fun. Um, but yes, this notion that you can connect the dots between leadership and culture and engagement and enterprise value or stock price or equity value is such an important conversation to be having here. And for folks out in the audience, if you happen to have a copy of my book, the black covered one, Going Behind the Numbers, you'll remember that David Van Adelsberg from Irrational Capital is a contributor to one of the chapters there, and we talk about this human capital factor. Guys, I want you to talk about the validation, the evidence that you had done before you even introduced this into the Harbor Capital platform.
Sure. So look, as you know very well, traditionally human capital factor is not or human capital is not easy to measure, right? It's it's difficult to get underneath it, and human capital is a cost, right? On when we look at where it shows up on financial statements, it's a cost. It's not an investment. It's not considered an asset, and the result is that our thought was that it's overlooked and it's mispriced. And if we could get underneath and really understand the nature of the relationship, the question was, are all these managers in fact correct that it is a major contributor, that it's a we talk about fundamental investors. What could be more fundamental than human capital if every manager and CEO says people are our most important asset? So we were able to take the combination of proprietary data, which is exclusive to us, and fuse it with publicly available data. It gives us an extraordinary data set, in some cases going back to data collection cycle of 2005. So it's been around a long time. So we've seen a lot of cycles. Through a very fortunate and circuitous way, we were connected to and introduced to the quant research team at JP Morgan, probably now going on almost 5 years ago. And they were very interested in this. We gave them the opportunity to look at what we had discovered. And subsequently, they have published 5 detailed research reports. When I say detailed, they're 35 to 40 pages each. The latest one came out in December of 2024. I might have this slightly wrong, but I think it was called The Human Capital Factor Still Going Strong. And there's just an independent, they're considered to be the number one quant research firm on the planet, according to II, and they have done a great deal of work over a long period of time, and have independently validated the alpha, which is achieved through our methodology. They're not alone. There are a number of organizations, very large organizations, global financial services organizations that have done the same thing, very impressive quant organizations who have done the same thing, to determine that when you get people right, you're rewarded through future equity value.
Yeah. And Bart, I don't know if maybe you're able to expound on that a little bit, because my understanding is, in addition to the high level research that David just alluded to, you guys are able to dissect employee engagement into various component parts. Can you speak to that?
Absolutely. And so, Dave, my partner David already illuminated one of the critical success factors for Irrational Capital, which is this amazing data set, right? But there's a second half to it, and that half relates to one of our other founders. David co-founded this organization with a world-renowned behavioral economist named Dan Ariely out of Duke University. And Dan's research had always shown that when we measure employee motivation, we measure the wrong things. We measure things like pay scale and benefits and vacation time and bonuses and option plans, the things that are easy to measure. And his research instead was saying, listen, what really matters to motivate employees are things called intrinsic motivators. Things like, am I proud to work here? Do I feel recognized? Am I emotionally connected to the organization's mission, vision, purpose? Do I see broad organizational effectiveness? And so we've taken Dan's theory and applied it to this data set. And as David said, we found extraordinary outperformance. When JP Morgan looked at the data, they went back 14 years. And what they've published is they have found year in, year out, in bull and bear markets, outperformance from the human capital factor. And they've said it's been an average of around 4%. And now, Dave, what you were asking is, we then take that human capital factor and to make it more digestible so that people understand what is embedded in these intrinsic motivators, we break it down to what we call the 7 dimensions of the human capital factor. And that includes pretty straightforward things like engagement, organizational alignment, emotional connection, organizational effectiveness. These core elements of these intrinsic motivators that ultimately drive people to really stand up and work for these organizations. And as David said before, for us, this just makes sense that ultimately there is no better, and I think it's one of the reasons why we're with you today, because I think you share this opinion. There is no better measure of quality of an organization than a motivated, aligned employee set. And that's what we're measuring. That's fundamentally what we're measuring.
Yeah, 100%. And when you talk about the we'll call them the larger components that you just described there,
Yeah.
my understanding is you can drill down even deeper within each of those things. Because I recall, having reviewed some of the data, a lot of the data, I recall one thing in particular that resonated with me was interesting was the impact of appreciation on employee performance. And
Yeah.
I mean, it's so fundamentally intuitive, right? People like to be recognized, acknowledged. Hey, good job, Johnny. That was awesome, in a sincere way. But there's a direct impact on performance as a result of that. Can you guys speak to that? And not only just that one, but maybe any others that were significant from your lens.
Yeah. I mean, just think about it for a moment. When you feel appreciated, right? When you have that sense that the organization values you, or in any relationship, you feel valued. How do you behave? What do you are you moving, are you moving forward? Are you leaning in? Are you willing to do something extra? It's that energy. And what happens when you don't feel appreciated, when you're feeling a bit taken advantage of? You generally lean back. And so it's, it sounds so soft, but it's so real. And,
Yeah.
other aspects are, pride, trust, transparency, feeling psychologically safe, right? I feel aligned, a great deal of alignment in the organization. And that, I mean, here's just a really classic item, and Bart touched on this earlier, which is think about compensation, right? It's easy to measure. And, we've for years, I mean, how much ink has been, used to describe the impact of compensation in one form or another. What we found is that the actual value of compensation, so the amount that you're being paid, now it's got to be over a certain threshold depending on your level in an organization, but it doesn't add much from an alpha perspective, future equity value. Fairness of compensation, I feel fairly compensated for the work that I do. It's a very big driver. And so one of the things that's really interesting is we use all of the data, both the intrinsic and the extrinsic characteristics, to create the human capital factor. Um, and and as Bart said, I mean, just take a look at the indices that we have. Right, 2 years ago, 23, the outperformance was about an S&P replacement strategy was about 420 basis points over the market in a very good market. Of that, 80% wasn't related to the Mag 7. Um, Last year, it was about 200, almost 290 basis points of outperformance, 75% not related to the Mag 7.
In Mag
So
7, you're alluding to something that's referred to as the Magnificent Seven, the large tech stocks that
yeah,
dominate the
yeah,
S&P 500
NVIDIA,
index.
Microsoft,
Yeah.
so on. So and by the way, these characteristics move around a bit. I mean, I'm happy to just share a very quick anecdote about what we saw going into COVID and coming out of COVID,
Sure.
as an example. So going into COVID, those companies that were prepared, that were in good stead, of the ability to embrace their employees, to support them, the concept of appreciation, the concept of having their back, those companies did very well. As we peaked and crested and started to come off of that COVID curve, those organizations which were willing to provide autonomy, to create an environment where people felt in control of their destiny, those companies performed very well. And we see this. The very interesting thing is that we see this as an anticipatory and a contributor to future equity performance.
Dave,
Yeah, and I just want to add something to that. I'm going to come to you in a second, Bart. But when you talk about appreciation and independence or flexibility, those things resonate with me on a personal level. My story is I was a single dad for more than a decade, and I talk about this all the time. I kind of discovered what employee engagement felt like in real time because I got the chance to work for some great leaders who understood that maybe sometimes I get a call from the nurse's office and I've got to leave to go pick up a sick kid and I need some flexibility. And those leaders that led with that empathy and flexibility and appreciation, man, I would walk through fire for them. And the ones that would roll their eyes and be like, "Oh, it must be nice to leave at 3 o'clock," not having a clue what I was getting into, yeah, they didn't get quite so much. Bart, I interrupted you. Sorry.
no, it's similar vein, Dave. I was just picking up on what David was talking about with regards to the outperformance. One of the questions we get all the time is, you all just timed this right. You've timed it when the information economy and the service economy is accelerating, and therefore this really only applies to organizations that are in finance and or information. And what I was deeply interested in before I joined the team was I wanted to make sure that this actually worked across industry and was independent of company size. And so I dug into those JP Morgan reports, and what became really clear to me is the human capital factor works no matter whether you're working on a manufacturing line or coding, for a software engineering company. Like, ultimately, people are people, Dave. They want to be recognized.
Yeah.
They want to feel connected to their work, and they want to understand how they are contributing, where they're driving the organization. They want to be free to innovate, and they want to feel trust and transparency across the organization. And to your point, the reason why ultimately I said this is an organization I need to join is because I had seen the same thing, over a 29-year career as an entrepreneur firsthand, right? That if we put our people first in our organizations, whether it be N1, a basketball footwear company, or B Lab, an organization that's trying to scale the idea of putting your people first globally, I saw over and over and over again, it wasn't just the right thing to do. It was a much better way to run a business. And to
Yeah.
find my friends now at Irrational, whom I've joined, who have found that connection that I think people have been looking for 50 years, Dave, the connection between employee sentiment in outperformance in the equity markets, for me, it was kind of like finding the Holy Grail. Like I'd been looking for this for my entire career. And here was proof, irrefutable statistical evidence that these are connected, in fact, connected to a degree where they are causal. It is driving future equity value.
Yeah, I felt the Holy Grail phenomenon when the first time I talked to David. So that resonates. I get that. Bart, you're the new guy, so maybe
Yeah.
I'll throw this one to you just for some fun, and David can expound. But when you started to unpack the data and you looked at the individual components that were contributing to engagement, were there any surprises for you?
I expected, and it resonated to me, Dave, that intrinsic motivators would be critical in connecting our performance to corporate culture. I was surprised. We have ranked those 7 dimensions that I referred to, Dave, by how they contribute to the outperformance. For example, right now, the one that is driving to the greatest degree outperformance as measured by appreciation above the benchmark is organizational effectiveness. Consistently, what we have found, Dave, and this surprised me, is extrinsic rewards does not contribute to outperformance in the equity markets. It is what we would call table stakes.
Yeah.
Like if you don't have those table stakes, then it matters dramatically, right? If you're not paying people fairly, and if people feel like their benefits package won't let them live a productive life, yes, that has a dramatic impact on your performance. But if you're trying to look for outperformance, extrinsic rewards has no correlation to the outperformance and is just your entry into the room. That surprised me. Because I can tell you, Dave, as a CEO for 28 years, every time I thought our culture was going sideways at our organization, the first thing I did was I did a pay scale study. First thing I did. And it just was, I think it is what is taught. It's what is understood by leaders. And if I actually take the moment to think about my own experience running these 2 organizations, what mattered far more was that people felt connected and engaged in the mission, the purpose, and the vision of the organization.
Yeah.
Uh,
David, any surprises for you in the data?
Yeah, so the extrinsic stuff, comp benefits, as Bart, was just talking about, that was a clear surprise. I mean, we were, when Dan and I first saw this, we it sort of made sense, but it was not what we expected. There are 2 other things that I think are very interesting that we did not anticipate. One is we thought that, consumer discretionary. So if you think of companies by sector, right? Consumer discretionary or tech, these are companies where they're very people centric, and retail. What we have seen is there is an enormous amount of consistency sector to sector, a sense of pride at a manufacturing company in the middle of the country. Is the same human emotion as a sense of pride at a financial services organization in New York. And so we do not see wild differential of the human capital factor between sectors, which was very interesting. That we did not expect. The other thing that has emerged as we've looked at this, particularly over time, is the consistency. Right? This is not fleeting. This is, in a very volatile market, the human capital factor is rock solid. And there's a whole series of analytics. And if anybody's interested, they're welcome to be in touch, and we're happy to share it. But the consistency in, when the volatility index goes up in politically difficult situations, when the 10-year is volatile, when the markets are volatile, the human capital factor, on a relative basis, is very, very, very stable. And that has, when you sort of get 2 layers deep, it's like, yeah, that makes a lot of sense, but we did not anticipate that.
That's fascinating stuff. I'm going to caveat this next question with the make sure that nobody gets in any hot water with compliance. We're not going to be talking about providing investment advice, and uh, past performance is no indication of future performance, and all those weasel words that somebody's lawyers would probably recommend that we talk about. But um, you're doing work with Harbor Capital, and as you mentioned, they've got some ETFs that are incorporating the human capital factor as a basis of their investment strategy. So human capital is an investable strategy, which is just phenomenal. Can you guys just talk a little bit about the underpinnings of those ETFs, the strategy, stock selection, things like that, and of course, just touch on the performance?
So, as you said, we have great respect for those lawyers that you just talked about and the compliance people. So we won't talk about the ETFs. I know you have Christoph Gleish coming up
Okay.
in the future, and
I don't
Christoph,
want you to step in a cow chip on this program. You take that wherever you can.
I appreciate that, but we can talk about the underlying indexes. So the underlying index for the flagship is the human capital factor large cap index. It's 150 stocks. It has essentially a correlation to the S&P from what's called beta of 0.99 or better, tracking error of less than 2%. So it's basically you get the same risk profile as you would get from the S&P. But the outperformance to the S&P of this index has been quite material, as I mentioned earlier. 420 basis points in 23, 289 in 24. In January of this year, it was over 75 basis points. So you're getting the same sort of risk profile, and we've made this investable through these through the public products, which folks can be in touch, and we're happy to put them in touch with the right people, and also by being able to access the signal which drives this. So there are essentially three components of our business. The first is the creation of these indexes for publicly traded product. The second is to provide access to a select group of people, and we really mean select. So this is not something we're selling, with a rate card to tons of folks. So there's a limitation on supply, but we have a few slots left, and we basically make the signal available to those folks who want to use it as a component of stock selection, and that's for folks who are running quantitative multi-strategy kinds of opportunities, or want a human capital factor an existing portfolio, which you can read about in the JP Morgan research is very, very constructive. And then the third is what Bart is doing, which is building the ratings agency, which is enabling companies themselves to secure their human capital factor rating.
Yeah, thank you for that, and apologies if I got you in hot water up front, but you
No,
handled it quite well, as you
I hope.
always do.
I hope. Hearts
Yeah,
to the
Bart.
people.
Sorry, David, I'm stepping on you.
That's all right. I was just sending love to the compliance people.
Okay. Bart, David just talked about the rating agency aspect, and that's actually where I was going to go next. So I want to give you a chance to talk about that, what it entails, and why it matters.
Yeah. So, ultimately, Dave, we do one thing at Irrational Capital, which is we focus on this new investment factor, the human capital factor. And the question is how do we bring that to the world, right? How do we take this new idea and bring it to the world? David just talked about one of the ways we do that, which is through our indexes that underpin these investable ETFs. And one of the things I just want to build on, recognizing, Dave, you got a beautiful audience that is beyond just a finance people. I'm going to try to make sure that everybody understands what David just said. These indexes, when he talks about the flagship, he's talking about our large cap index, meaning we just focus on large cap companies. And that index in 23 did 4.6% above the S&P 500. The reason why that's so material is because it had no more incremental risk than if you just bought the S&P index. we've actually weighted it in a way that it tracks exactly the S&P 500 with a correlation of 99%, right? And so it's absolutely tracking, but you get the exposure to all these highly motivated employees. And so without that performance, Dave, I don't have a ratings product, right? If you cannot point to this is working, and it is working not just for the period that the ETFs have been live or the period that the index has been alive, we can back test it for 17 years and prove that it has worked. It is one of the things that is insane about this performance is like, if you think of indexes, Dave, and you think of like people traditionally talk about value and growth, and value and growth kind of oscillate. When value is doing well, growth isn't doing that well. When growth is doing well, and so they go up and down when you compare it to the straight line of market performance. If you put on the same graph the performance of the human capital factor, it is a steady line of 3 to 6% above market performance. And that makes it extraordinarily unusual. The persistence of the outperformance you don't find in any other index. That gives me, Dave, the opportunity to go to individual companies and say, we have found something. It is unique, it is replicable, and it is persistent. And I can take a fresh analysis of your employees through a survey. We can gather data on all of your employees through a survey. It obviously doesn't include personal information, but it gives me a sense of how the employees are feeling across these 7 dimensions that we talked about, right? And what I'm allowed to do, Dave, that makes this truly unique is I can benchmark that company's performance against the existing database. And I can show them where they are outperforming compared to that database that we have and underperforming. And because I've just collected all the demographics, I can do it by geography. I can do it by division. I can do it by gender. I can do it by seniority. And the end result is a heat map. It's a heat map that shows you where there might be a hot spot in your organization where your value creation strategies that you're trying to push forward to build the business are running into a brick wall because you have an employee group or a subset that is not yet ready to drive that value creation. And that's the value of the actual rating. And we have 2 different folks that we talk to, Dave. We talk directly with companies who are interested in this to drive their own performance. We actually also talk to private equity. And so private equity investors are interested in using this across their portfolio so that they can align with the leadership of their portfolio companies on how we're going to drive value in the business and whether there's a problem with the corporate culture in any particular arena of the business. And so that's what I do. It's a relatively new endeavor, Dave. We're only 7 months into it, but knock on wood, so far, it's been really well received because of the very clear evidence of the outperformance through the indexes. Does that make sense?
Oh, 100%. I think that human capital is the last bastion of value creation, and would love to continue that conversation with you at a later date. Unfortunately, we're getting close to the end here, guys. Go ahead, David.
I just wanted to add one thing to this, and I know we need to wrap it up. And that is that what Bart just described is very, very different than what has been done relative to employee assessment or employee listening, right? It's not that the survey is so different, but if you think about it, the results of human capital data collection is essentially comparing the results of a survey to the results of a survey in some form, right? So, this market group versus that market group. And I'm not suggesting for a minute that can't be valuable in some way. What we're doing that's remarkably different is collecting that data and connecting it to the creation of future equity value. So I just want to put that sort of sharp edge on it. It is an entirely different kind of process that provides an insight that's very different from what's been done historically.
Thank you for that. And I do want to give you guys a chance for what I'll call the final word before we wrap up here. And is there anything that I didn't ask you here in this conversation that you want to make sure that the world understands about irrational capital and the human capital factor?
Bart?
Well, the only thing that's been illuminating for me, Dave, as I've, joined the business and had these conversations for the last 18 months. When I talk to investors, if I'm honest, it is a new concept that begins with skepticism that takes a minute for them to understand about how this is just a new measure of quality, a new measure of a fundamental in a business that we just didn't have access to before, and we shouldn't be surprised that it actually correlates with outperformance, future outperformance. At the same time, Dave, when I talk to CEOs and CFOs, the answer is it's about time. Of course, there is a connection between how my employees are motivated and connected to the firm's vision and mission and our outperformance from an equity value creation. It is an instant recognition of something that they fundamentally believe and understood, and they've never seen it before. And so I think that's one of the true values that I think Irrational Capital is providing beyond, our products, is just an affirmation of what I know as I always believed as a CEO, and it is now statistically independently proven. And I think that's a real contribution to the broader conversation about how to run a business.
Oh, for sure. David?
I would just add, look, you would expect us to do in the do on this recording, this, being with you, to do something in the financial services world, which is called talk your book, right? We're talking our book. We're saying this is really terrific. I'd invite, I know Bart would invite, everybody on our team would invite healthy skepticism and to take a look at the fact that this has been independently validated. We can send the reports. We're open to, having conversations and enjoy the process. I will tell you that our newest advisory board member, a gentleman by the name of James Walker, is the former head. I'm going to probably get this slightly wrong, but he was the former global head of J.P. Morgan's private wealth business and on the investment committee, the global investment committee for J.P. Morgan. And he entered the initial conversations very skeptical. This is a guy who understands the investment business extremely well, did his due diligence, and is an enthusiastic supporter, shall we say, at this point. So we're very confident that we have discovered something unique, and welcome the opportunity to chat with folks about it and to get into the details, and not just the veneer of it.
That's wonderful. That's a perfect segue to wrapping up the program. Why don't you guys tell the audience how they can connect with you, how they can learn more about you and Irrational Capital?
Sure. So, you can find us on at our website, which is irrational.capital. No .com, so irrational.capital. I'm a DVA at irrational.capital, and Bart,
BWH at irrational.capital. We're both also relatively active on LinkedIn, and so feel free to find us on LinkedIn as well.
For sure.
That's great. And folks will find more about you in the show notes. Guys, I can't thank you enough for joining us today and Behind the Numbers. It's been truly my pleasure to have you on the program.
Delighted, and thank you, David.
Thank you, Dave. Appreciate it.
Great. We've had my buddies from Irrational Capital on the program today. Definitely take a look at their website, dig deep into their data, and really understand what's going on and connecting the dots between human capital and enterprise value. My name is Dave Bookbinder. I'm known as a business valuation expert, and I've written a couple of books on the value that people contribute to a business enterprise. They're called the New ROI series, and you can find them wherever you get your books. You can also find me on LinkedIn. I would always love to have a conversation. Thank you out there to everyone for listening to this program and supporting this program. We can't do it without you, and know that it is truly appreciated. Shout out to Frank in Missouri for your continued support. Really appreciate all your commentary, my friend. Thank you. That's all we have for today, gang. We'll see you next time on Behind the Numbers.